Hey traders, welcome to the Raghee report for Sunday and Sunday the 12th. Hope everyone is doing great. We have an interesting week coming up. We have the wild card coming up. The wild card in terms of what it is the markets are going to do in terms of the reaction to obviously the news that everyone's talking about right now. This is obviously even overshadowing any of the FOMC outlook, and that is what is going to happen with the SVB Bank, Silicon Valley Bank narrative. And so far, look, I haven't been digging into it any more than I know it's going to obviously affect regional banks, KRE. We know it's going to affect the XLF, already has. That's obviously a big one there. So KRE, XLF. If it's affecting the XLF ETF, that lands squarely at the Dow, where the number one sector is, the XLF. And then secondarily, although still importantly, it's going to affect the S&P, where after tech, financials are the number two weighted sector. This is where it gets interesting. And I think a lot of you who have kind of been through the 08 cycle, many of you remember that. The word bailout is a very, obviously emotional one. It means a lot to a lot of us who remember that time. The easiest thing right now is to set aside the emotion, to set aside the opinion, and just remember that, we're probably going to hear from the Treasury, Secretary of Treasury. We're going to hear from the Fed chair, and we're going to hear what their plan is. I'm less interested in what they're going to do. I'm just focusing on this as a trader. And I'm more interested in the traders who have already Sunday morning heard from Yellen. I'm not surprised that we're gapping up. Take a look at the open here, gang. Not surprised that we're gapping up. I didn't go into the weekend tremendously bearish because, well, one, we sold off so much in anticipation of what we thought was going to be the worst case scenario. And over the weekend, a lot of things can happen. So I'm not saying I was bullish going into the weekend. I wasn't bearish. I just kind of went in with a clean slate, remembering, gosh, 08, we know what likely the game plan is, what the playbook is. But again, unemotional. We'll just see what comes because it's only 6:03 on Sunday, and we'll see what happens. I don't know that we're going to necessarily have a lot of hot zones that are going to be more important than what happens with this SVB narrative. We had non-farm payroll Friday. The week after non-farm payroll is usually very, very quiet. Last week was an unbelievably active week between Humphrey Hawkins' testimony, the news about the bank, non-farm payroll. I mean, most of us just, realize the market had to digest bonds, treasuries, currencies, indices, had to digest so very much in a very short period of time. And most of the reactions are going to be based on overreactions, right? So that's really it. Like I said, I caught a couple blurbs about Yellen's appearance on Face the Nation. I believe it was Face the Nation. Those are such early Sunday morning. So I think early this morning, people kind of started calibrating to, okay, there's going to be something done. Other than that, gang, I just spent all Saturday talking to a group of traders, reiterating, trade what you see, not what you think. So I even try to make sure I'm not delving into what I think, but rather what I see on the charts. And that is what we are here to do tonight. So let's get to the calendar. Jump in and take a look at the calendar. And what we'll look at here is what are we dealing with, not just tomorrow, but for the entirety of the week. Monday is going to be very quiet, which is great. No hot zones to contend with. That's fine with me. We only get 1 day reprieve. Here comes the CPI. Now remember, on Humphrey Hawkins' testimony, day one prepared statement, Jerome Powell laid out the plan that they will continue to be hawkish if the data supports it. Not a newsflash, but it's a great reminder that if the data can support the fact that they can remain more hawkish, they will. Obviously, jobs data is going to be a big part of that. CPI on Tuesday, while not their favorite inflation metric, is a big one, and that's going to be out on Tuesday. Moving on then to Wednesday, more inflation data. PPI may not be the PCE or the CPI in terms of impact, but it's another price point that would fall under the category of the inflation macroeconomic pillar that we know the Federal Reserve is going to continue to look at and cite as justification for whatever their messaging and their next move is going to be. And that's always the game, gang, messaging and move. Speaking of messaging and move, I thought maybe we'd get a breather, but we're not. Here comes the ECB. Look, there are two central banks that can move the U.S. markets. Bank of Canada sometimes can. ECB, if you're looking at U.S. dollar movement or euro movement, Thursday morning is going to be a big one. Here comes the ECB. And then Friday, preliminary University of Michigan consumer sentiment. So a lot to process this week on top of the wild card of the SVB regional bank narrative. So how do we proceed, right? How do we proceed in an environment like this? Well, one of the things that I talked about, and this was in the free video at the Simple Trading YouTube channel on Friday, one of the things that I talked about is, hey, how about time frames? How about changing the time frame that we're looking at, and therefore also changing the expectation for follow through, the time horizon that we would need for follow through. And while day trading through this environment will probably be pretty solid, despite the hot zones, the morning release hot zones that we're going to get, the 1 hour swings are likely to be the best place to be able to take an overnight trade if we'd like it. Now, I had a bunch of traders and actually, if you caught the Friday video, the one position that we took over the weekend was the ZB, the bond trade via TLT options. And bonds are up today, and hopefully TLT has a nice open, and that will work out really nicely for the long calls that we bought on Friday. That's what a short-term swing is going to look like. Get in on a Friday morning, maybe get out on a Monday morning. Get in on a Friday morning. Our expiration for the swing is March 17. So we have till Friday. If it continues to move in our favor, we'll continue to tighten stops and just see how high is high, right? But this is a time horizon of basically Friday's trading session, Monday, Tuesday, Wednesday, Thursday, Friday, right? So I'm talking about 6 trading days at most for the overnight exposure. And that's what I mean by short-term swings. We took I won't say risky position because we had already scaled out, reduced size on Friday, but I love the idea that we do have some moves that can let us take overnight trades. And that's what I mean by these short-term swing trades. All right, so let's go ahead and jump into the questions. Gang, don't be shy. Type them on in if you have a question. We're going to be here for another 20 minutes for our Raghee report. We'll see what we've got. But yeah, if you take a look at what's happening with bonds, yields are dropping, which they did obviously on Friday. Euro's off the lows, right? Euro's off, S&P is off the lows. The euro, these are my 3 favorite symbols to sort of take a quick pulse of the market with. What are bond yields doing, or what is the bond market doing? What is the S&P doing? And what is the 6E, the euro FX currency doing? Euro's heading higher. What does that mean? Dollar's heading lower. These are generally speaking decent risk appetite type moves. But obviously the reason for the dollar moving, the reason for yields moving lower is still from a popular narrative, a bit of a recession concern even now. However, if dollar continues to drop and we can see that there is a sigh of relief rally from last week's sell-off due to the XLF, KRE, SVB Bank, or the SVB Silicon Valley Bank narrative, who knows, right? All I would be thinking, though, I'm not going to get way ahead of myself. Those of you that are wondering, Raghee, if we bounce from here, what's the plan? I'm going to cut the range in half like a sandwich, right? Straight up, Pingala. Just going to cut that last major move in half, go from minor high to minor low. Just grab the wick of that candle there at 39.64, 39.60, that area. That would be a 50% retracement of this last major move that took us from the high on March 6th down to the low on March 10th. This is what I'll be keeping an eye on. All right, so that's the quick pulse. And let's go ahead and dive into your questions. If you have them, type them on in, gang. All right, so first up is, all right, Nick, how are you doing? Hope you're having a good weekend. I am. I am. We had a great class on Saturday. Looking forward to the bonus follow-up session for the platform, how I use my trading platform as my trading partner. That's going to happen tomorrow at 3 Eastern. So you can definitely still join me, by the way, for the class, which is available at simplertrading.com/masterclass. All right. Would I say that the seasonality suggests that this month is going to be a good time to go long natty? All right, natural gas. Let's take a look at the chart, shall we? You know what? Let's do this. I need to pull up this. I mean, I have this running on my desktop all the time, but let's take a look at this from the perspective of TradingView. All right, so let's take a look at the daily time frame of natty gas. Let's move this 1 hour over and take a look at the daily. All right. So when I take a look at daily natty, it went into a sideways market for a handful of sessions, as you can see here. It's gone back down into a downtrend, which could be tricky. But we have yet to take out the lows of February 22nd. Those February 22nd lows are going to be very important. If you're viewing this through the prism of UNG, here you go. Again, this is going to be your February 21 low. And while we have transitioned back into the downtrend, not really a big deal. This, if we can go back to neutral, could be maybe a 1, 2, 3. But as long as we don't make a lower low, here's where the seasonality gets interesting. So let's go to seasonality here. Here we go. So let's pull up natural gas. I'll just grab UNG. And let's see, there's UNG. And what is our expectation? Well, yes. So normally what we see is the low put in February. Oftentimes, let me grab my drawing tool here. All right. Oftentimes what we'll see is something that looks a little bit like that. And then we get our seasonal run up. So that would be intact as long as we don't put in a lower low. That was the low. As long as that low in February can hold, I think the seasonality has some merit. So it's not a matter of, is it time to get long? All my cards on the table. Me and my crew over at the Sector Secrets Mastery, we already have some UNG calls dated for June expiration that we're in. So I've got exposure to this trade. So, immediately when I've got exposure to a trade, when anyone has exposure to a trade, skin in the game, there's going to be a bit of bias, right? Because it's very difficult to be unbiased when you've already placed your bet, so to speak. However, the way that I'm keeping myself honest is as long as that low holds, I think the seasonality is in play. So would this month, or would currently this environment be okay? Yeah, I think as long as, traders weren't chasing this thing higher, which sadly, I'm sure many traders did. But as long as you're playing a retracement, as long as you're playing some kind of maybe double bottom, maybe a retracement of the current move, right? I mean, that could be a really interesting one to do too. We look at the high to low range here, like so, and we look at, some kind of retracement there. I'm not sure that that's something that's necessary. Just keep an eye on maybe some volume ledges. Let's just make sure we don't put in a lower low. And Nick, so I would say, yeah, that's fine. That's fine. I don't have a problem with that. Better to do it now than on, say, the 3rd, right? Or even as it was surging higher. So I'm with you. If we're going to buy it, buy in a weakness, and it's valid as long as we don't take out that low. That's the way that I'll look at it. Mr. Walker, you always do crack me up. Click the like button to make sure that it is working. Yes, we have a fully functional like button. All right. Hey there, Mike. Kudos to me and my team for a class well done. I'll tell you what, Mike, I've got just the best team that I could ever hope for. I've got the Lorna bot handling the indicator support and just the best version of the DPMR that I've ever used. And yeah, I think Trish did a fantastic job with the class slides and topics. So yeah, thank you. I appreciate it, Mark. These things don't happen by themselves, right? I got a great team behind me. All right. Next up is what's my outlook for the S&P? Sure. So I'll start with ES futures, champ. I'll start with the ES futures. And the reason I'll start with that is because obviously S&P is more of that 24-hour look, right, at what's happening with the S&P. It takes 1 hour off a day as opposed to the SPY, which is basically a liquid 9:30 to 4 look. So if my ES is up, which it is, then obviously where we are at 9:30 is going to be reflected in what the S&P has done through the Asian session, the European session, the UK session, the Asian close, and then right into the New York open. So if we can maintain the movement higher, I'll look for that retracement that we spoke about. If obviously, though, please let me make sure we're not looking at solely a minor low or some sort of oversold stochastic or something like that. Please remember, for the same reason we move lower, the XLF narrative, I think it was a two-part, right? We got a two for last week. We had a more hawkish Jerome Powell, and then that was then followed up by the unforeseen event, hence they call them black swans. The unforeseen event, I wouldn't even consider that black swan worthy, quite frankly. It wasn't that tumultuous. I guess it depends on where you sit, though, right? But when we look at where we are now, if the narrative starts to unwind, the Federal Reserve is going to step in, Treasury Secretary is going to step in at some point. I guess the worst then would already be baked into the cake. It's hard not to say we could be bullish. But Champ, let me mention this. Champ, let me mention this. This is the way that I think we've spoke about it in the free videos. This is the way I'm speaking about it to my mastery folks. The S&P is three pieces, right? The largest piece, except from a sector perspective, is the XLK. This is the number one sector. If XLK can move higher, if XLK can remain above this Darvis level, that's good support. The third weighted sector is healthcare. Healthcare has been a mess, right? Healthcare has been a straight up mess. It continues to be very, very bearish. So the question is, if we have three and it's 2 against 1, meaning if XLF and XLK can rebound, it takes the S&P higher. But if XLF and XLV continue weak, the XLK is probably going to be overpowered by those two sectors moving lower. Tech is still the most important. So if I have more faith in XLK, and XLK can be traded directly through, the ETF, and XLK really then tracks me towards the NASDAQ, I'll tell you what, the cleanest place, the sort of the cleanest air, so to speak, to be in will be, can we focus on tech, semiconductors, XLK, XLC? Where is the relative outperformance strength that is not necessarily going to be influenced by whatever it is that's going to happen with banks? And I want to remind my Russell traders, and remember, Russell has it's influenced quite a bit by the KRE. KRE is really what's front and center in this. XLF, dragging down JP Morgan, Citibank, Wells, makes Bank of America make 0 sense when it's a regional bank. KRE makes perfect sense, right? This is more a view on the regional bank situation. I would be very careful with the Russell this week as well. All right. So the place that I want to kind of hide out in bonds, in euro, in the tech corner of the market. So I'm continuing to look at how I can sort of circumnavigate the ongoing drama around the this narrative. I will tell you this. I mean, TikTok, if it hasn't happened yet, right? the Federal Reserve and the Treasury is not going to come in and swoop out and save SVB. They're likely to, what Yellen's been insinuating since this morning on her Face the Nation or whatever she was on. I can't remember. I just saw a blurb on it on YouTube or Twitter. They're going to make sure the depositors are going to be made whole, which is a very different conversation. They're going to make sure the depositors are made whole. So that's action. It's a sigh of relief, and I'll be looking for the markets to bounce from Friday's lows. S&P, financials, regional banks, but I'll still be very interested in sort of avoiding that narrative and sticking with tech, right? And that's the way that I'll look at it. But my outlook is, look, I'm just going to let history play out. I'm going to let what we are already getting hints at play out, which is the Federal Reserve and Yellen are going to at least have a plan. I think her word was they have a program, and we'll see what happens. We'll see what happens. That's the risk with after a big event like last week, going into the weekend short with the uncertainty of what could be said or done by the Federal Reserve, by the Treasury. And I think a lot of traders who went into the weekend short may not be so happy this morning, Monday morning. We'll see. We'll see. So that's the way I'm going to look at it, H-Champ. All right, David, how are you? Does weakness in financials lead to more people going into GC? Am I open to a GLD position or GC? I think there's this notion that gold is a flight to safety. I don't believe that it is necessarily. What gold reacts to is the chasm between the nominal yield of a bond, which is actually going down with ZB moving higher, right? With TLT moving higher, and the rate of inflation, which we can say has been pretty steady for the most part, right? So if that chasm is narrower, gold goes up. And that's what we're seeing. So bonds and gold are attached. Bonds, gold, and inflation are attached. But I've never viewed gold as a flight to safety because we've seen plenty of down days where gold gets rocked, right? And that's because we're seeing that real yield, real interest rate, either expand or contract, and gold moves inverse to that. So am I open to a gold long position? Absolutely. And it has nothing to do, though, with the financials, because, again, I don't believe in a flight to safety into gold. What it is the continual, and that's a great question you ask. It's a continual test and retest of the 200 propulsion in a neutral environment with an oversold stochastic. So we can actually say gold was probably a buy most recently, specifically on the 8th, as we retested that area around the 200 propulsion. And in the now, as we see here, it's moving higher from that. We did it once before on the 27th, moved higher, moved back down on the 8th. Pretty much the same signal, neutral environment, Darvis, 200 propulsion, slow stochastic signal. I mean, there you go. That's what we're looking at. All right. So would I be open to a long position? So David, this is the way I'll do it. And this is the way I'm going to walk my mastery folks through it. All right, David? What we're going to do is we're going to look at a green. So we're going to keep it to the 1 hour. My mastery folks know this. We're going to look at a short-term swing rather than the daily, which frankly at the moment doesn't give us a setup anyway. Rather than the daily, let's go to the 1 hour. Let's talk about the structure of the 1 hour. If we take a look at the bottom, green trend. What does a green trend tell me? A green trend tells me that we can look to get potentially long. This is a bullish environment. It's really the best way to describe a green environment is no short, no shorting. All right, no shorts, culottes maybe, but no shorts. So we're allowed to be long, right? We're allowed to be long, and that's it, right? So we always want a process that isn't telling us what to do as much as sometimes telling us what not to do, right? When to be flat, when to be long only, when to be short only. So we can take advantage of DPMRs. We could take advantage of maybe a surf the wave, but I don't imagine we're going to sell off 35 points to get down there. That's okay. The DPMR should be much, much closer. So 1 hour daily price movement range. Am I open to that? As long as this structure is green, Absolutely. Absolutely. Thanks for the question. All right, next up, Furman asks, what would be your conditions for a potential true gap fade? Ooh, okay. So Furman, I can't tell you now what I'll do. So tomorrow morning, the bell rings when I'm going to think about a fade. Number one, I got to see what the market structure is on the 5 minute time frame. If that market structure is bullish on the 5 minute time frame, I'm not even allowed to short. So that's number one. Does the structure validate, okay, give me permission for that particular strategy, which in this case, we're perceiving is going to be a gap up. So the fade would be a short. So that's the first thing. The second thing is I look for patterns in the first 5 minutes after the bell to determine if a fade is really going to happen. So there's a gap and move lower, or there's a gap and a go. We don't know which one it's going to be, but if we're seeing much of the optimism right now, the bullishness, basically riding this optimism from the Treasury, from the Federal Reserve, I don't know that I'd want to fade it anyways. But we will look then for the 5 minute range to tell me right after the bell whether or not the selling pressure is actually going to be willing to come in after a gap up, after a true gap up, even a vanilla gap, Furman, for that matter. Okay. All right. Sandeep asks, what do I think about Nvidia on the daily? Sure. All right. So Nvidia on the daily is overall. So here we go. So overall an uptrend. It's moving higher very nicely. Buy the dip, may not get down there. Buy the dip, mean reversion doesn't even come into focus until 218 and a half, right? A more aggressive mean reversion would be about 225 and a half. But we could likely look at something 3 points above that at 228 and a half as an aggro daily price movement range buy. That's a buy zone right there. So that's what I would look at on Nvidia. As far as the question on how do you use an anchored VWAP, the way that I use an anchored VWAP is just as support and resistance, my friend. I love that you're asking about the anchored because that's what I've always taught. All right. But the idea here is once you've anchored it, and right now mine is anchored to the first trading day of this year. Once you've anchored it, it's just support. And you can see Nvidia is well above the anchored VWAP. It's well above the 200 propulsion. It's also in a uptrend and has been since the last week of January. So that's a great looking chart. Yeah, Sandeep, beautiful looking chart. DPMR, those zones that I outlined, that's what I would consider in play going into tomorrow. All right, XLK, 1 hour neutral, multi. Mike, I'll look at that tomorrow. Just let's see what we have in terms of the setup. I don't have a neutral multi, but let me make sure I've got my extended settings. Let me make sure here. So I've changed my settings a million times, showing folks things in the class. Let me make sure I've got this set right. No, I do have extended. So I don't have a neutral. Do I have a neutral on the 1 hour? No, we have a downtrend on the 1 hour. So no, I actually cannot buy the 1 hour. But Mike, for those of you that have the DPMR, that means you took the class. And if you took the class, you know it's likely going to be that daily, which I am fine with. Yeah, that we'll talk about tomorrow. Right. So possibly for that swing. And look what else it's getting close to. Kind of to Sandeep's question. Got a anchored VWAP coming in there. We got a Darvis zone coming in there. Yeah, there's a lot to like on that daily, Mike. A lot to like. All right, Mr. Walker asks, when trading on the 1 hour, is liquidity more important than expiration? Mr. Walker, if you're talking about how we select which option, which expiry, which strike, yes. I mean, it's not a matter of more important. It's a matter of I'm looking for the sufficient time for the 1 hour setup. And then I want to make sure that I have enough liquidity at that strike that I want to buy. So it's not And either or, I mean, they both have to be within the parameters of what I think would be an ideal trade. So I don't want to have a 1 hour setup with not enough time to expiration. That won't let my trade operate in enough time before decay really starts to, batter the value of the premium. But liquidity, I don't want to enter a illiquid market either, right? So it's really both, right? It's not going to be an either or. All right. Okay. So, gang, that's what I've got here for today's show. Thank you so much, as always, for joining me for our Raghee report. I am Raghee. This is my report. We're here every Sunday from 6 to 6:30. By the way, join me for Charts and Coffee tomorrow. If you never join me for the Caffeinate and Dominate 20-minute show, it's right here at the Simpler Trading YouTube channel, 9 a.m. Eastern, 30 minutes before the bell. All right, gang, be good to each other. Enjoy the rest of your weekend. Thank you so much for joining me. My hardcore, I love it. Hardcore traders getting ready for the week. I'll talk with you soon. Be good to each other.